SABMiller has finally succumbed to the sweetened takeover offer by Anheuser InBev, and if the deal gets the go-ahead by all the relevant competition authorities, it will be the third biggest merger ever. Gunther Deuthsch is standing by at the JSE. We cross now to him for more on this record deal to explain some of the facts. Gunther, SABMiller accepting that takeover proposal at the fifth time of asking.
Indeed, Natasha, so they've done. And I've got Gary Booysen with me from Swiss, who's going to enlighten us about some of the facts surrounding it, as well as some of the impacts. Gary, welcome.
Yeah, good to be here.
For starters, the price. I mean, it's more than our national budget that these people are going to pay for it.
It's massive. So I think the total deal price, if you calculate it back, it's £44 per share. Yes. With obviously there's a scrip offer in for the major shareholders, which are Bevco and Altria. But it pretty much values the deal at about I think it's 1.4 trillion rand. So it's an absolutely enormous deal. Also just maybe a point. I mean, the deal hasn't gone through yet. This is just SAB's board saying that they will present the deal to shareholders, but it seems very likely that shareholders are going to accept this. I mean, it's a 50% premium to where SAB was trading before.
Is such a premium justified in an instance like this?
Well, price is what you pay, value is what you get. So, I mean, from my point of view, I think if I were as an SAB shareholder, I would definitely go for the deal. I think it's an amazing price that you're getting for the stock in an industry which is suffering a lot of competitive pressure from the likes of craft beer, wine, spirits, and an industry where volume growth is very, very flat. So, I mean, if you look at in PE terms, it's well above 30. I mean, you're talking 38. In an EBITDA terms, it's about a 16 multiple, which isn't particularly expensive. But I don't know. Looking at the future of SAB and the combined unit, I suppose there are a lot of synergies that can be pulled out. I mean, they're going to make one out of every 3 beers internationally, and I suppose you do want to have a piece of that action.
But now the competition authorities are, of course, going to be a major hurdle, and. Definitely. If we add on top of that, the US antitrust authority has already put AB InBev into some hot water, accusing them of stifling the craft beer market in the US. Very naughty that, but they've got it in for them, and it would seem that this deal is facing some major headwinds.
Yeah, I mean, obviously with SAB board saying that they'll present to shareholders, I mean, it is one major hurdle down, but there's still a lot to come up. So the first thing is, the antitrust. Now, antitrust shouldn't be a problem in most of their jurisdictions. I mean, the overlap between SAB and AB InBev, between developed markets and emerging markets, is really, it's like a puzzle that they fit together. The issue is going to be in China and in the US, and it looks like most analysts are citing that they're going to have to sell their CR Snow operations. SAB will have to sell in China, and they're probably going to have to sell their Miller Coors business in the US. Now, if we don't make it through all these regulatory hurdles, and I agree with you, I think the US, especially after looking at AB InBev buying up all the distributors and then not allowing craft beer to be sold, I think they're going to have it out for AB. And also just in terms of the deal, if they stumble at a regulatory phase, so if they can't get through antitrust competition, AB InBev is now going to have to pay SAB, it's a reverse break clause of about $3 billion that they're going to have to do if they can't get this through, or if AB shareholders don't accept the deal. So still a lot to play for, but it looks like the guys are pricing at about 80% chance the deal will go through now.
I can imagine a lot of people are clamoring for SAB shares now, but it's probably a risky time to buy them.
I mean, you see, it's also a question of how much of the deal has been priced in. So, I mean, like I said, it's trading at a 50% premium to where, or at least the deal's done at a 50% premium to where it was trading before the deal was announced. Obviously, we got that 20% spike. We got another 10% spike today. So you're sitting at about, just under 810 rand a share. That if the deal goes through, you'll be getting cash because as a retail shareholder, you'll be getting the cash equivalent of about it's about 905 rand a share, depending on where the pound is sitting. Now, for me, that's just the interest carry that's priced in there is about 50 rand. There's about a 50 rand risk premium. I still think that there's significant downside if there's any stumbling at any of these regulatory hurdles.
Okay, and your bet Yes or no, it will happen.
Yeah, like I said, there's an 80% chance it'll go through. Now, I didn't think that AB InBev would actually be able to raise the capital and be able to foot the bill that they have. I think now that they've actually made, again, it's an offer in principle. It's not a formal offer. The formal offer deadline has been extended to the 28th of October. But I mean, if that offer does materialize as a serious offer, I like SAB shareholders have to take it, in my opinion, and the deal should go through. 80% chance. I think the deal is going to go through from here.
Gary, thank you for that. Okay, there we have it. Now, if you're wondering the impact it might have had on the market, you just need to look at the industrials index. It was positive this morning by about 0.75%. But guess what? Only 2 shares of the entire bunch were in positive territory. That was British American Tobacco, which gained only 0.4%. And then, of course, SABMiller up by almost 11% this morning, pushing the industrials into positive territory and making it the only index on the JSE today that is positive. The rest of the market, well, they're suffering under some Chinese trade numbers that came out, as well as inflation numbers from Europe, for instance, the UK showing it's slipping back into deflation, and then German business confidence has taken a big knock. Back to studio now.